Hi, Assalamualaikum warahmatullahi wabarakatuh. Okay, so now we from group 6 will present for cash cycle, and yeah, we will introduce ourselves first. Okay, my name is Nurul Naimah binti Cik Ilyas and my metric number is 196326.
Hi, my name is Harinya Suhaira binti Rushdai. My metric number is 196509.
Hi, my name is Nur Humaira binti Suhaimi and my metric number is 198519.
My name is Nelly Patricia binti Najar Anwar and my metric number is 199920.
But for the cash cycle, we begin with the process involved in cash cycle. Cash cycle, first we will process on received cash. Cash received from account receivable, sales of property, plant and equipment, and the investment. And from the cash received, it will be transferred to bank. Then if there is any cash return, then it will cash return will be happen if there is any cash return from the customer. Next, the next process will be on payment of cash. So cash in bank, cash outflow from the bank to make payment cash for the purchases, long-term debt, and payment of payroll. Then it will be returned. If there will be a return for the purchase return, then it will also be in part of the processes. Next. Next, I will present on source document involved in cash cycle. First, there will be cash disbursement journal, which a record kept by a company's internal accounts that itemize all financial expenditures a business makes. Next will be bank statement, a document that's sent by the bank to the holder or account every month. And then will be cash receipt journal that manage and records all the cash inflow of a business organization. Next will be entities cash book account that record both bank transaction as well as cash transaction. The cash column in the cash book shows the available cash, while the bank column shows the cash at the bank. Then will be general ledger, a bookkeeping ledger that serves as a central repository for accounting data transfer for all sub-ledger like accounts payable, account receivable, cash management, fixed asset purchasing, and project. Next will be document for credit note, which a note when a seller issue credit note when customer returns or not satisfied with the product or services that they receive. And last but not least will be debit note, where buyer issue the debit note to the seller due to the damaged good received, incorrect good received, purchase cancellation, or other specified circumstances. Next will be presented to the next presenter.
Okay, hi. I will present about journal entries and accounts involved in cash process. Okay, so for the first transaction, which is the revenue transaction, the journal entries and the accounts involved is debit cash and credit services revenue. and the second is sales of PPE, debit cash, and debit accumulated depreciation account, debit disposal account. When the company got a loss for the disposal, and credit property asset account and credit disposal account if it gained. And next is issuance of long-term debt. And the journal entries is we will debit cash and credit notes payable. Next is purchases of inventory. The debit will be the purchases and the credit is cash. And next is purchases of PPE, and debit property, plant and equipment, which is the PPE, and we will credit the cash. For payroll, debit wages payable and credit cash. So next is flow chart of cash cycle. Okay, for the first stage, which is the sources of cash. We have three sources of main sources of cash, which is the revenue, sales of PPE, and the issuance of debt. And the company will get the cash, and then the cash uh, we will use, and the next stage is the disbursement of cash for purchases, payroll, and long-term debt. For purchases, we will involve two process of purchases, which is the purchases of inventory and purchases of PPE. So for the next, I will pass to next presenter.
Okay. Next, the internal controls involved in cash. There are two: cash receipts and cash disbursement. For the first one, cash receipts. Next, there are 5 internal controls. Next, first, establishment of responsibilities. Only designated personnel, which is cashiers, are authorized to handle cash receipts. Second, segregation of duties. It must be different individuals that receive cash, record cash receipts, and hold the cash. Next, documentation procedures. Use remittance advice, mail receipts, cash register tapes, and deposit slips. Next, physical, mechanical, and electronic controls. Store cash in safes and bank vaults. Limit access to storage areas, and use cash registers. The last one for cash receipts, independent internal verification. By the supervisor count cash receipts daily, and treasurer compares total receipts to bank deposits daily. For cash disbursement, the five internal controls are the same, but the description are different. So the first one, establishment of responsibilities. Only designated personnel, treasurer, are authorized to sign checks. Second, segregation of duties. Different individuals that will approve and make payments. Check signers do not record disbursement. Next, documentation procedures. Use a print number checks and account for them in sequence. Each check must have approved invoice. Next, physical, mechanical, and electronic controls. Store blank checks in safes with limited access. Print check amounts by machine with indelible ink. For the last one, independent internal verification. Compare checks to invoices and reconcile bank statement monthly. Next, the risk area for cash cycle. For inherent risks, first one is cash susceptible to error. Usually, cash has a high volume of activities during the period comparing to other accounts. This is because um, incomes or expenses are likely to involve in cash in the business transactions. Hence, the high volume of transaction tends to make cash more susceptible to error compared to other accounts in financial statements. Second is cash is susceptible to theft, which means that cash could be manipulated and stolen by management and employees. And cash is most prone to theft either from internal staff or external people if there are no proper controls in place. Though the main concern related to cash thief here is the internal thief, as it is usually related to the triangle of fraud whenever fraud and theft happen. The last one is susceptible to fraud. This is because cash is the most liquid asset in the balance sheet comparing to other assets. Hence, it is most susceptible to fraud as it is easily taken out or transferred between one bank account to another with the electronic transfer. Illegal activities such as money laundering also could occur if no proper controls are in place. For control risk, the level of control rates for cash depends on how strong and effective the internal controls on cash that the client has in place. The segregation of duties and authorization are usually the most important internal controls for cash, as well as many other financial line items. With a proper segregation of duties, no single person can have control over the entire cash process, which means that different individuals will handle the cash. For example, cashier only receive the cash while the treasurer only authorize the disbursement of cash. Lastly, the control risk is usually high if there is no proper segregation of duties and authorization controls in the company. Next, I will invite the next presenter to continue.
Now I will talk about important assertions and the relevant audit procedures. Okay, there are 5 important assertions in cash cycles, which are existence, completeness, valuation and allocations, right and obligations, and presentations and disclosure. Next. Okay, for the assertions existence, cash balance under balance sheet really exists at the reporting date. And the relevant audit procedures is confirm bank account balance with financial institution, prepare a proof of cash to ascertain that all recorded receipts have been deposited in the bank, and simultaneously count all cash on hand to ensure that no cash is counted more than once. For completeness, cash balances include all cash transactions that have occurred during the accounting period. Account for all check numbers to determine whether there are any missing or outstanding checks that might cause the cash balance to be overstated. And also obtain a review or prepare a year-end bank reconciliation to accurately determine the client's actual cash position at the close of the period. Next. For valuation and allocation, to determine that all cash and related accounts have been included in the financial statements at accurate amounts and are classified properly. The relevant audit procedures are trace a sample of entries in the cash receipt journal to the AIR, subsidiary ledger, duplicate the deposit ticket, and general ledger to determine whether the cash is stated accurately. And the last assertion is right and obligation. The company has title to the cash accounts as of the reporting date. The relevant audit procedure is confirm the existence of year-end bank balances of the following, which is the amount on deposit, direct liabilities, other direct or contingent liabilities, and other security agreements. Auditor should also investigate any checks made to cash or bearer to determine the propriety of the disbursement. I will pass to the next presenter.
Next, I will present on cash case, which included in the document of Group 6. We proceed to the questions. The first question is, you suspect that the cashier may have misappropriated some money and are concerned specifically that some of the undeposited receipts of 3,794.41 may have been taken. Prepare a schedule showing your estimate of the loss. Next. This is a schedule that have been made from the question. From the questions, it stated that the cash has show a balance of 18901.62 and a credit balance of 100 on the bank statement did not appear on the company book. So we should add credit by the bank of 100. So we will get adjusted cash balance of 19001.62. Next, we adjusted on bank balance. From the question, it said that outstanding checks there are outstanding checks for number 62, 183, 284 that is not recorded. But in the question, it only recorded for the number check for 8621, 8623, and 8632. So outstanding check will be included in this by deduct it. So we include the number 62, number 8183, number 284, number 8629, number 8623, and 8632. And the total will be 1062.29. Then the amount will be deducted from the adjusted bank balance on November 30, which will get 14487.71. Then the adjusted cash the amount of it will be deducted from the adjusted cash balance. Then it will be give result on the total amount of 4513.91, which show that cash that should be on the hand of the Pembroke company. Next. In the question, it said that cash reported on December 7 is 3794.41. But when we do recompute the calculation, cash which should be hand will be 4513.91. So we took the differences between the two amounts and get the estimate amount loss of 719.50. So from the above calculation, it is estimated that about 719.50 is the estimated amount of loss. Next.
Okay, I will continue on question B. How did the cashier attempt to conceal the theft? Okay, it is observed that the cashier removed 719 and 50 cents after he estimated the loss amounting to 719 and 50 cents. The attempts made by the cashier to conceal the theft are as follows. Number 1, all the checks which were outstanding were not listed on the bank reconciliations. Number 2, the outstanding checks which were underfooting in nature were shown on the reconciliation. Number 3, the items which should be added to the book balance were subtracted from the bank balance. Number 4, miscalculating or incorrectly stating the outstanding checks shown on the reconciliation. And lastly is added the list of outstanding checks shown on the bank reconciliation so that the total is misstated by $100. Next.
Next, for the question C, on the basis of this information only, name two specific features of internal control that were apparently missing. So, to maintain the internal controls, the cashier should actually prepare the bank reconciliation account and reconcile the statement to prevent the accounts from being misleading. And then second, another reason for the organization to internal control is the cashier should keep track of all the cash receipts to the deposits in the bank. So these are the internal controls that were missing in Pembroke Company. Next, I would like to invite Naimah.
Okay, for the last question, if the cashier's October 31 reconciliation is known to be proper and you start your audit on December 10, what specific procedures could you perform to discover the theft? Okay, so for the first audit procedure is the inspection of records or documents, which the auditor will examine the checks involved in the November transaction that recorded in the company's cash book and trace to the bank statement. And the second is trace the check written in November with the outstanding checks in the month, and with the check register in November to ascertain the outstanding check. The second is scanning. Auditor will identify unusual items or transactions in the bank reconciliation and company's uh, bank statement. And the second is trace the cash on hand at October 31 and receipt during November to a certain cash at November 30. And the last one is recalculation, which the auditor will prepare an independent bank reconciliation account as on December 10 and compare with that of the bank reconciliation date on November 30. So that's all from us. Thank you.